Hello and welcome back to the channel. Today we'll be discussing a company which is primarily in the financial sector, Motilal Oswal, and it's got quite a diversified portfolio in terms of the things that it manages. And it's also got a unique business model in the sense that it's divided its business into the primary and core operation. And the second part is the treasury investment. So after it's done with allocating all the profits and distributing the dividends and paying the taxes and everything, the net profit, what it does is it also plows back some of the profit back into its treasury investment. And that investment, in a sense, has been growing quite significantly in terms of growing at a good rate of 21% CAGR. Now, this is a unique business because most of the business, what they do is when they earn their profits, a lot of companies do not know where to invest. So, for example, capital light businesses, what they do is either they give it out as dividend, they keep it within their reserves, they have an investment book which is primarily comprising of debt instruments like government bonds. And there are very few companies which know exactly that they need to make this much of capex investment. So, for example, we discussed Saregama, that Saregama has kept out 1,000 crore worth of money to do acquisition of for the rights of the businesses that it buys. But in the case of Motilal Oswal, things are a little different. What they are really doing is the profits that they are earning, they're plowing it back into the capital markets and they are letting the compounding do the magic. So, because of this, the price to earnings for Motilal Oswal would be a little deflated compared to its competitors. But in times of a difficult market turmoil, and which obviously in cycles they do happen, the price to earnings then will be inflated in nature. Um, they were a broker-led businesses. They have transitioned to wealth management business. They are focusing on high net worth individuals and ultra net worth individuals, and they call out that it's a close to $2 trillion opportunity, and they do not want to miss out on that. So in this segment, what we'll do is we'll quickly jump into how the net worth of the company has grown since the time it incepted, the key metrics of Motilal Oswal's growth, the double engine growth, which I was talking about, the value proposition of Motilal Oswal, the opportunity in India, transition from the brokerage business to now a well diversified business, and the financial performance metrics. So we are looking at the investor presentation as a Q2 FY25 and H1 FY25, and hence this will allow us to gauge as to whether this investment deserves a place within your portfolio, but I would urge you to please do your own research or consult a financial expert while making your investment decisions. What I'm trying to do is I'm trying to lay out the facts for you. But obviously, the entry point of the stock or the exit point of the stock is something which requires a lot of expertise, which requires a lot of tracking, and it shouldn't be done on the women fancy that, yeah, I have put it out in the YouTube channel, so this should be picked up. So let's dive right in. So Mr. Raamdeo Agrawal, who's also known as the Warren Buffett of India, he's one of the co-founders. Obviously, Mr. Motilal is the other co-founder, and the company knows goes by his name. One very interesting thing about the office of Motilal Oswal, which is housed in Mumbai, is when the stock market is up, the entire building turns. There's some green lighting around the building, and when the stock market is down, the lighting turns red. So here we are talking about when it incepted. It incepted in 1987, and Motilal Oswal, Raamdeo Agrawal, in his different interviews, also talks about how they had to really bootstrap initially uh, to put money together and start the brokerage business. And it's been 37 years since, and let's see how they've performed. So they started off with a 1 lakh capital, and we can see that they've grown to currently as 11,070 crore as of H1 of FY25, and they have the profitability. They have recorded some of the highest profitability in these years in 2024 and 2025. In 2024, they recorded the highest ever yearly profit of 2626 crore. And in H1 of FY25, they recorded the highest ever half yearly profit of 2263 crore. So, what was the yearly profit in 2024 is the half yearly profit in H1 of FY 2025, minus 400 crore. So we are seeing huge traction, and what really we are also seeing is that 4% of India's household saving is in equities, Mumbai may be the financial capital of India, but the amount of assets that is tied to financial assets is close to 5%. So the financial capital of India has 5% of its capital tied to financial assets. Most of the assets that it's got is money tied to is property, gold, and physical assets per se, and also some of the safer routes like FD and government bonds, which I think the return right now is becoming questionable, although people are talking about putting the money in smaller banks FDs where they are able to get quarterly compounding and are able to generate close to 9 to 10% risk free. But it is not risk free because we have seen the number of banks which have gone under. And if the banks do go under, then the maximum amount you can recover as per the insurance is 5 lakhs. So what people are doing is they are just hitting the ceiling of 5 lakhs and they are diversifying into various banks. But for a high net worth individual of 5 lakh, some would be pretty paltry in terms of expecting any investment returns. So here we see the total revenue and the total PAT and assets under advice, how they have grown. Within the Nifty 500, what we have seen is that the um, it's grown by 5,225 crore. So it was 5,225 crore and it has grown to 24,245. Um, so this Nifty 500, not too sure what this is, but this is the total revenue of the business. So the total revenue of the business sat at 465 crore in March of 2014, and it has grown by a staggering 31% CAGR. So for money to double every 3 years, it requires 26% CAGR, and they have been able to beat that as well. And what we are talking about is Nifty growing. If Nifty is growing at a benchmark of 13 to 14% CAGR over a period of long periods of 10 years, we can see the compounding that has happened. So 465 crore has grown to a staggering amount of 7,148 crore. Um, so this is astounding. And even in the total PAT, so total PAT has grown by a higher margin, higher growth rates than the total revenue. So the total PAT was sitting at 77 crore, but the double engine growth that we talked about, that one is the core business and the second is the treasury investment, where the profits are being plowed out of the core investments and being plowed back into the treasury investment, and that is then invested um, and allowed to grow and compound over the years. That is a really strong USP that Motilal Oswal has over the other people who are managing money. So, for example, Nuvama doesn't have this structure. Also, Nuvama, the other ones, they're also highly dependent on brokerage. So, um, also there have been some circulars floating around by SEBI, because of which there is the FNO business of Motilal Oswal is expected to drop by 50%. Although the FNO business is dropping by 50%, but because they're well diversified and they have a double engine of growth, their PAT will reduce by 6 to 5%. So that is how well diversified they are. That one of the segments is dropping by 50%. Even then, the PAT is only dropping by 6 to 5% because the FNO segment, they are not highly dependent on it. Because a lot of the other businesses, they are highly dependent on brokerage business. And that will have a huge impact on the balance sheets and the profitability and the price to earnings. So that is something that needs to be washed out because companies which are heavy on it will suffer. So here, this is the double engine model we are talking about. A is the operating business, which is again, which also has attributes which are highly attractive. So, for example, it is asset light. It does not require a lot of capex. It is a business of knowledge. You impart knowledge and you do the recommendations to your clients and put the money into investments which are over the long run will yield results. So it is asset light. It has a diversified revenue. Why diversified? Because it is not only in brokerage but wealth management, advisory, and also home loans as well. Although the home loan segment is quite small, we'll see the percentage in the next slides. And because of the diversified revenue, it gives the company a huge advantage because they're not highly dependent on one segment, and also the lot of regulations that keep coming in, and regulation may jeopardize a business's impact if they are highly concentrated on one part of the business. So, for example, if the capital gain tax has increased from 10 to 12.5%, imagine if it would have increased from 10 to 25%. Uh, with the kind of things that are happening and you caramel popcorn being taxed at 18%, you can't rule that out. Everyone is quite worried about the erratic nature of the tax structure and some of the calls which are being made by the finance ministry. So you can't rule that out if that does happen. And we have seen a huge surprises. So for example, we were expecting health and life insurance GST to be removed. But what happened? It didn't get removed. And now, if we are talking about long-term capital gain tax moving from 10 to 12.5%, even if it would have moved to 20%, people wouldn't have been surprised because such has been the erratic nature of the calls that have been made within the finance ministry. Um, so the first engine is asset light, diversified revenue. Each business is managed by a separate CEO. And if you go through the caliber of the CEO, most of them are chartered accountants. A lot of them are coming out from US MBA schools, some of the top-notch US MBA schools. So highly credible people backing as CEOs for each of the individual businesses, not like Raamdeo Agrawal and Motilal Oswal manage the entire show. So they have decentralized power, and which is a very good sign. In terms of treasury investments, what they're saying is that their skin is in the game, highly liquid investments. So they can obviously T plus one now. You want to liquidate your investments, and they have a dividend coming through it. Focus on healthy annual returns, investments used strategically for operating businesses, investments providing synergy and stability. So this is the active investment book that the business has. So looking at the robust past and the promising future, so operating PAT clocked 34% CAGR in last decade for the operating business. They are optimistic about the future growth, given that such a small proportion of people's savings are channelized towards the equity market, and also a very small percentage of foreign institutional investors' money is channelized into India, given that India is now going to be the third largest economy by 2028, above Japan and Germany. And if you calculate the percentage of foreign investment flows into India compared to the position that India has or its contribution to the GDP of the world, that percentage is still lower. So that also warrants a growth. So a lot of the foreign institutional investors, they say that the price to earnings multiple of India is very high, but they're looking at it as a whole. But there are individual names. So you can have a price to earnings multiple of the blanket index at 20 to 25, but within that you have individual names which are trading at a multiple of 10, 12, 20 high growth businesses. You also need to account for the growth that these businesses are having, or where Europe is literally struggling to churn out business. Most of the countries are going into recession. There's a lot of rift happening within Europe, but Europe and the US and the UK as well. But India is currently churning out the growth that it has been. Although the last quarterly growth numbers were muted, close to 5 to 5.5%, but I have no doubt in my mind that given the demography that India has and given that the growth factors that are aligned, this should see huge fillip going ahead. So the book posted 44% CAGR in the last decade. In the last 10 years itself, the treasury investments have grown by 44%. And what they're saying is they want to maintain the IRR at close to 20.8%. They also want to maintain the dividend payout ratios and the net worth. They reported 22% CAGR in the last decade. So the net worth has grown by 22% CAGR, and they expect to maintain or improve it. So these are some of the value proposition that Motilal Oswal brings into the picture. They have a strong manufacturing capability. So research-led broking, loan against securities, mutual funds, PMS, AIF, you name it, and they have it. So although the home loans, the growth has been little muted, the margins haven't been that great, and although the percentage of home loan contributing to the overall business is also low, and we'll talk about it. So they also have a third-party product distribution where they distribute insurance. So the growth is kind of like branched out into these businesses as insurance penetration grows and bonds. We know that JP Morgan included India's bond within its index. So a lot of money flow is expected to come in, fixed deposits, MF, and all of these. In the corporate advisory, we know how IPOs are the new flavor of the season. anyone with a balance sheet, anyone with profit, anyone with a revenue even of 12 crore is coming and putting in an IPO. So although this is unnatural and a lot of it is a froth, and this I think will be looked out by SEBI to try and mitigate businesses which don't deserve to have an IPO to come onto the bourses, and this will happen. In terms of wealth advisory, they have alternate assets, credit solution, treasury solution, and estate planning as well. So this is what I was talking about. That the percentage of people, so the number of individual in 2022 in the billionaire segment was 161. That is expected to rise by 195 in 2027 estimate, and ultra high net worth individuals currently at 12,000 to rise to 19,000. High net worth individuals that is greater than $1 million, currently at around 8 lakh, expected to double by 2027. So the potential wealth opportunity, $2.5 trillion to be managed, and a lot of its business are recurring revenue in nature. So, for example, the wealth management that they do, they get management fees year in and year out. So that is recurring in nature. So that currently is standing at close to 50%. So that there are some of great signs for the business, and as the wealth management keeps growing, which should grow given the trends that there are, and given the low penetration that there is currently. And also we have seen a jump. So earlier the percentage of people's wealth which were invested in equity was 2%, which has jumped now to 4%. And 4% is quite low. I think in terms of the US, it should be in the high ranges. It should be in the 30 to 60% ranges. Do let me know in the comment section if you know exactly what the percentage is. Would help the viewers to really analyze as to where the US is in terms of channelizing their savings towards the equity markets, and where India is. Yeah. So here we are looking at some of the financial performance numbers. Anything that you see here, so the assets under advice have grown to 5.7 lakh crore. So these years have been very good for the business. So the assets under advice have grown by 82% year on year. The net operating revenue has grown by 46%. And these are some of the big metrics that the business has grown by. So the operating PAT in itself has grown by 53%. So these are some of the big numbers, and there's been big growth that has happened. And also, CRISIL has upgraded the rating outlook to AA positive, which is a great sign for the business. So here we can see that the wealth management, capital market and asset and private wealth management. So momentum continues in quarterly operating PAT. Um, and these are some of the growth numbers that have happened. So 71%. So high growth business. As you're talking about the housing finance is sitting at 27 crore for the half year. It's sitting at 27 crore, and it has had a degrowth of 19%. Whereas the other businesses are growing at a staggering rate of 71, 45, and 63%. So great signs for the business. So this is the breakup Q2 FY25. Housing finance is sitting at 85 crore, 87 crore. Wealth management 634. Asset and private wealth management, these are for the high net worth individuals, sitting at 490 crore. They're generating a total PAT of 1242 crore. So 1242 crore, and here we are seeing some of the growth rates that there are for each diversified business that they have. Consolidated half-yearly profits at rupees 2263 crore, and last year they recorded the highest profits ever. So for the year, so that was close to 2,600 crore. So their 1 year profit, 1 year profit, which was the highest last year, their half-year profits is almost touching the 1 year profit. So these are some of the trends that we are seeing. So this is the consolidated net revenue mix, and here we can see that 55% of the business is 55% of the business is on an annual recurring revenue basis. Um, yeah, so this is the consolidated net revenue mix of the business, and what we can see is that 55% of the business is experiencing recurring revenue, uh, and transacting based revenues close to 45%, 47 to 45%. So this brokerage business will be impacted. The F&O volume should reduce. This will impact stocks of BSE as well, which depend on F&O on a huge numbers to churn out the revenues that they churn out. And even for them, Motilal Oswal, this will impact. So 50% of their revenue will be impacted of the brokerage business, but that will impact, as we discussed, close to 6 to 5% of the profit after tax. We'll quickly, I think, skim through some of the more important numbers. Yeah. So these are the growth in gross flows and net flows for the business. The difference between gross flows and net flows is gross flows doesn't account for redemption and profit. So people redeeming their um, investments into Motilal Oswal, and net flows, they do account for um, redemption. So here what we are talking about is in Q1 of FY25, they're sitting at 5,180 crore, and right now 13,238 crore. And the SIP flows have also been increasing. The SIP market share is above 2.5% now in Q2 of FY25. And the 1 year performance. Um, so here we are seeing that the total number of strategies that they have for MF plus PMS plus AIF is 12. Number of strategy outperformed benchmark is 9. Mutual fund is 4 and alternate is 5. So we'll quickly look at some of the trends that there are. Home finance will give it a skip. Um, so here we can look at the treasury investments, which really brings this business to the fore because of the USP that this business has over some of the other businesses, the way it's structured. Because the founder is very investment savvy. He knows a lot about capital allocation. He knows the power of compounding. So this structure is unique to Motilal Oswal, and credit to Raamdeo Agrawal and Mr. Motilal for having a structure like this. This is even Tencent in China. Tencent in China is able to deploy a lot of capital because they have a huge investment arm. So the huge profits that they generate undergo um, investments from the huge investment arm. So they have a separate investment arm, and that gives it a big push, right? So instead of distributing all the profits that there is to shareholders who might not be optimum capital allocators, they retain it with themselves. They believe that they are better capital allocators than the shareholders, and that has huge benefits. So Motilal Oswal is also following on the same footsteps. Even Berkshire Hathaway, Warren Buffett jokingly says that the one time Berkshire Hathaway did distribute dividends, he was not there in the board meeting room. He had gone out to the washroom, and that's when they gave dividend out. Otherwise, they do not give dividend out. What they believe is that they believe that they are the better capital allocator compared to the shareholders, and having wealth with them will yield far better results than giving it out as in the form of dividend. So this is the cost and mark to market. We can see that the cost in September 2024 close to 3454 crore, and here 4659 crore. So the gross revenue as well, you can see the jump that there has been even in the pact. So these are the management team: Mr. Motilal Oswal, MD and CEO; Raamdeo Agrawal, chairman and some of the other people who are heading the different segments. So the institutional equities, asset management, wealth management, investment banking, the other divisions of Motilal Oswal. So we'll look at some of the trends that we are seeing. So here we are seeing India's GDP is expected to grow from 3.7 trillion to an estimated 30 trillion by 2047. That is 9x with 9.5% CAGR. This is what is expected, and this is what they have projected. Now, a lot of people may argue that this is too optimistic, but yeah, you can post in the comment section what you think the GDP number should be for 2047 as per your estimates. And if you use a lower compounding rate of close to 5%, what do you think the GDP number would be? And even the gross domestic savings, what they're saying is with GDP growth, India's gross savings operating from USD 14 trillion to USD 126 plus trillion by 2047. So this is the one I was talking about. This is the total Indian household assets, which is close to 11 trillion as at FY23. This is as per the Jefferies report of 2023. And here what we can see that equities forms just 4.7% of the total 100% pie. Most of the savings is in the form of physical assets, property, gold, those kind of assets. And this number was sitting at 2.2% in FY13. It has had remained stagnant for the longest time. But in FY22, post-COVID as well. So in COVID, it was 2.7%, and post-COVID, we are seeing that it is in the high 4.3 to 4.8 to 4.7% now. I still feel this is at its nascent stage of explosion, I should call it, because I don't see this percentage remaining stagnant or consolidating for decades on end. The people that I speak to, they are highly um, want to invest into the markets because the tax structure and the inflation is such that if somebody is not willing to put in money into the equity, then it's a big risk, in fact. So as they say, attack is the best form of defense. Earlier, investing into equities would be called a luxury or called a foolish mistake, but now things have changed, and there are a lot of different types of instruments that are there. There is the index fund, there is the mutual fund, direct mutual fund, and indirect mutual fund, and inverse. So the fear index and those kind of things. But I really feel stock picking, individual stock picking should give an alpha over all of these and other investments. This is the rise of the number of demat accounts. This is where we were struggling to find a vaccine, or we were just coming terms with the COVID, and that's when the explosion really started. Um, India was sitting at close to 4 million. This is in 4 crore worth of demat accounts, and here currently we are sitting at close to 18 CR worth of demat accounts. I don't know about the legitimacy of this. 18 crore sounds very high actually for the number of demat accounts within India. And here we see the SIP flows. In April of 2016, it was close to 3,698 crore, but right now it's sitting at close to 25,000 crore per month. This is the per month SIP flow that we're talking about. So that's it from my side on this edition of Reviewing Motilal Oswal. Do let me know in the comment section some of the other businesses that you want me to analyze. Thank you and have a great day ahead.